Your investments aren't being destroyed by a market crash. They're being quietly bled out by tiny mistakes you don't even notice. The same 10 errors wreck beginners and pros alike, and today you'll learn every single one. Here's the brutal truth most people never hear. Investing failure is almost never about being smart enough. It's about behavior. The market rewards discipline, and it punishes panic, hype, and impatience without mercy. Smart people lose constantly. Think about that for a second. The biggest threat to your returns isn't the economy or interest rates. It's the person staring back at you in the mirror. Master these 10 traps, and you beat the people chasing the next hot tip. Mistake number 1 is trying to time the market. You wait for the perfect moment to jump in, then you bail right before things drop. It feels smart. It feels safe. It quietly destroys your long-term returns. Here's why it fails. Nobody, and I mean nobody, calls the top and the bottom consistently. You'd have to be right twice, over and over, for decades. The fix is simple. Stay invested and buy at a steady pace. It's called dollar cost averaging. You invest the same amount every month, rain or shine, high or low. You stop guessing and let time do the heavy lifting. Boring beats brilliant here, every single time you do it. Mistake number 2 is panic selling. The market drops 20%, your stomach drops with it, and you sell everything to make the pain stop. Congratulations, you just locked in your losses at the worst possible moment. Here's the part that hurts. Markets recover. Every single bear market in history has eventually been followed by new highs. The people who sold at the bottom missed the entire bounce. They turned a temporary dip into a permanent loss. The fix is to have a plan before the storm hits. Decide right now that you won't sell in a downturn. Write it down. When fear screams at you to run, your plan calmly tells you to stay put. Mistake number 3 is chasing performance. A stock triples, the headlines explode, and your friend won't shut up about it. So you pile in at the top. You're not investing anymore. You're buying someone else's good luck, late. FOMO is expensive. By the time something is on everyone's lips, the easy money is long gone. The fix is to ignore the noise and stick to your strategy. The best investors are gloriously, profitably boring on purpose. Mistake number 4 is failing to diversify. You put way too much into one stock, often your own employer's stock, because it feels familiar and safe. But if that one company stumbles, your savings and your paycheck both vanish together. Familiar does not mean safe. The fix is to spread your money across many companies using broad index funds. One bad company can't sink you when you own hundreds. Diversification is the only free lunch in investing. Take it. Mistake number 5 is paying high fees. A fund charging 2% a year sounds tiny. It isn't. Over 30 years, those fees can quietly swallow a huge chunk of your final balance. You'll never see the money you lost. Here's a quick example. On a large nest egg, a 2% fee versus a tiny one can cost you hundreds of thousands over a lifetime. The fix is low-cost index funds. Always check the expense ratio before you buy. Mistake number 6 is waiting to start. You tell yourself you'll begin once you earn more, once life calms down, once you understand it all. But every year you wait, you lose your most powerful years of compounding forever. Compounding rewards time more than money. Someone who starts small at 25 can crush someone who starts big at 35. The fix is to start now, today, with whatever you have. Even a small amount beats a perfect amount later. Mistake number 7 is letting emotions drive your trades. Fear makes you sell low. Greed makes you buy high. Your feelings are running your portfolio, and your feelings are absolutely terrible at investing. They get it backwards every time. The fix is to take yourself out of the decision entirely. Automate your investing so money flows in on schedule without your mood getting a vote. Set clear rules and follow them. Robots don't panic, and neither should your system. Mistake number 8 is checking your portfolio too often. You refresh the app 10 times a day, and every red number tempts you to do something. More checking leads to more trading, more taxes, and far more costly mistakes. The fix is almost insulting in its simplicity. Set it and forget it. Check a few times a year, not a day. Overtrading is how you turn a good plan into a pile of fees and regret. Leave it alone. Mistake number 9 is not reinvesting your dividends. Your stocks pay you cash, and you let it just sit there or spend it. You're leaving free compounding on the table, year after year. without even realizing the damage you're doing. Reinvested dividends are a huge slice of the stock market's long-term returns. The fix takes one click. Turn on automatic dividend reinvestment, often called a DRIP. Your payouts buy more shares, which pay more dividends. The snowball builds itself. Mistake number 10 is investing with no plan and no emergency fund. When life throws a surprise bill at you, you're forced to sell your investments at the worst time, just to cover rent. Your portfolio becomes your emergency fund. The fix comes in 2 steps. First, build an emergency fund covering several months of expenses in plain cash. Second, set clear goals so you know why you're investing. A plan and a cushion keep you from ever selling in a panic. Now here's the proof that ties all 10 together. Year after year, studies like the famous DALBAR report show the same shocking thing. The average investor earns far less than the very funds they actually own. Read that again slowly. How is that even possible? The fund just sits there earning its return. But the investor jumps in and out, panic sells, and chases hype. The gap between what they could have earned and did earn is pure behavior. There's another stat that should scare you straight. If you miss just the market's 10 best days over a few decades, your final returns can be slashed nearly in half. And those best days often arrive right after the scariest crashes. Sit with what that means. The people who panic and run miss the exact rebound days that make all the difference. Time in the market beats timing the market. That single sentence could be worth a fortune to you. So how do you actually use all of this? You don't need a genius IQ or a secret stock pick. You need a simple system that protects you from yourself. The advantage isn't being clever, it's refusing to be foolish. Every single trap we covered has the same root, a human emotion overriding a sensible plan. So the cure is the same too. Build the plan once, automate it, and then defend it from your own worst impulses. That's the whole game. Let's make this real. This week, do 3 things. First, automate 1 recurring investment so money moves without your permission. Second, check that your dividend reinvestment is switched on. Third, glance at your fund fees and ditch the expensive ones. Then do 2 more things. Make sure you've got a cash emergency fund so you're never forced to sell early. And finally, delete the stock app from your phone's home screen so you stop checking it 10 times a day. None of these take more than an afternoon, but together, they fix the exact behaviors that quietly drain most portfolios. You're not chasing returns anymore. You're plugging the leaks that were costing you a fortune you never even saw. Here's your permission slip. You don't have to be the smartest person in the room to win at investing. You just have to be the calmest and the most consistent. Discipline is a skill, and you can absolutely build it. The best investors aren't fortune tellers. They're people who set up a sensible plan and then had the patience to leave it alone for years. That patience is available to you right now, completely free. You just have to choose it. Let's lock it in. Don't time the market and don't panic sell. Skip the hype, diversify, and slash your fees. Start now, automate to beat emotion, and stop obsessively checking. Reinvest your dividends and never invest without a plan and a cushion. Every one of those is a leak you can plug today. Master them and you'll quietly outperform the crowd that's busy chasing the next shiny thing. Remember, most investing failure is behavioral, not intellectual. Win the behavior and you win the game. Now I want to hear from you. Which of these 10 mistakes have you been guilty of? Be honest, drop it in the comments. You're definitely not alone. If this helped you see your money clearer, smash that like button right now.